All eyes are on China's urea export program. Will shipments really stop or get extended into year end? The answer could flip global fertilizer prices. Meanwhile, India's latest tender and tightening ammonia supplies in North America are adding new dynamics to the market. I'm Johanna Botta, and here to break it all down for us is StoneX's VP of Fertilizer, Josh Linville. Josh, lovely having you again.
Lovely being here.
So, I want to start with China's urea exports. What is the latest guidance on whether shipments will stop this month or continue through the end of the year? And what would each scenario mean for global prices?
So the simple answer is the expectation, the current guidance is that exports will largely stop on October 15th, so next week. This is what the date has been for quite a while. This is what the market has been expecting. However, look back to how the Chinese government has approached urea exports for the last several years. This isn't a last couple of month thing. This is the last several years. The Chinese government back in 21, 22 saw global prices skyrocketing, saw supplies getting tight, and decided we are going to slow down and or stop our exports for two goals: lower domestic prices and keep supplies high. And both those goals, they've done a very good job with that program all the way through now. That, I think, is what the question is on the Chinese government's mind this today. How are those two things being done? And when you look at domestic prices, they've actually been staying fairly solidly low. They've been decent for the Chinese farmer. We check that box. When you look at operating rates and you look at the export flows, yeah, export's been going, but operating rates have stayed pretty high. We think that inventories are staying fairly decent. You check that box. That's where we're starting to get a little hopeful. And listen, fertilizer market, you don't want to get yourself hopeful because it always seems to disrupt it.
Hmm.
But we are hopeful they are going to come out, extend that period out to the end of December, and if they do that, I think that provides a lot more tons to the marketplace. I think that creates a little bit more pressure on the downside for this price out there because all of a sudden that's new competition, that's new tons that were not factored into the global S&D to start the year. Now, if we adhere to the October 15th and all of a sudden those exports start to shut off, the rest of the world is able to sit there and say, I no longer have to compete with that Chinese ton. I no longer have to compete with that Chinese seller. This is a good thing. I can start to try and push these prices back up where I didn't really want to give them up in the first place.
Okay, let's move on to India now. They just announced what's likely its final urea tender of 2025. What are the details of this purchase and its implications?
Yeah, this is the one we've been talking about since the conclusion of the last tender. We knew that this thing was coming down the road, and it was just a matter of when are they going to announce this. So they have come out. It looks like they're looking for 2 million ton on this last one. Again, it's on the higher side of estimates, but within estimates. The offers are due no later than October 15th. So again, next week. Shipments are due by December 10th. So a fairly long shipment window. And here again is why China is so important. If Chinese exports are allowed to continue to flow, there should be a lot of tons offered on this tender. However, if China shuts it down, India might be looking at the marketplace all of a sudden is feeling a little more bullish, a little more confident in its price ideas.
Very interconnected. Now, before we wrap up, let's talk about what's happening in North America. We're already seeing signs of tight supply in the ammonia market. How big of a concern is this heading into the fall season, which we've been talking about for the last couple of weeks?
Yeah, and it's let's be real about this. Isn't widespread yet. This isn't something where the entirety of North America is saying, "Oh, we're out of product. We have nothing left." It is not that dire. It is simply a situation where some of the manufacturers, some of the sellers are saying, "I'm pretty well committed for the rest of the year. I've got a lot of the tons that I know I'm going to have already sold or already going different places." So we continue to see this not as a huge concern. We're not ringing the bell and saying, "Oh my gosh, flee and freak out," and anything like that.
Hmm.
What we are saying is have these conversations quicker. Talk to your supplier. Figure out how they're sitting if they've got the tons in place. And don't think that just because we show up on November 1st, those tons are going to be available. We are expecting a very, very big fall run, presuming Mother Nature lets us go. And that's going to keep supplies on the tighter side. Now, we've gotten to this point several times in the past, and a rain event or something happens, and we kind of back away from it. It's just something to bring attention, and this is why we've been seeing anhydrous high, right? Demand has been large, supplies are largely unchanged.
Josh, thank you as always. And thank you for watching. For more financial content, don't forget to like and subscribe to our channel.